Good morning from London. I'm Kriti Gupta alongside Guy Johnson. We're an hour away from the opening trade. Here's what you need to know. A complete 180 on China. President Donald Trump saying a 10% tariff on Chinese imports could come as soon as next month, all part of his crackdown on the fentanyl trade. And still a deal maker, Trump also announcing a $100 billion joint venture with SoftBank, OpenAI, and Oracle to fund AI infrastructure in the States, all while trying to find an American buyer for TikTok. Plus, of course, the global trade conversation continues at the World Economic Forum. We are live in Davos. Guy.
Kriti, let's talk about the markets. European equities are going nowhere in a hurry this morning. Let's park that and come back to it a little bit later as we head towards the open. Asia, though, really encapsulates the two themes that Kriti's just been talking about. Look at the Nikkei. We're up by 1.6%. SoftBank is having a cracking session. It is up double digits percentage terms because of the AI trade that Kriti was just referencing. But take a look at China, down by nearly 1% right now. Is the tariff story really the reason for that? I thought we were getting 60% tariffs, not 10% tariffs. But nevertheless, a bit of profit taking may be coming through in the market this morning. There's a bunch of single stocks out there that you want to focus on. Netlflix is going to be one of them. Adidas is another. That's the ADR overnight. Strong sales coming through from Adidas. We'll see how it opens at the opening trade. That starts the countdown, at least to it, right now.
We're talking about a tariff of 10% on China. Other countries are big abusers also. You know, it's not just China. China's an abuser, but the European Union is very, very bad to us.
President Trump continues to talk about what is happening with his tariff agenda. It all happens apparently on February the 1st. We'll see which details we get. Maybe we'll get some more details on Europe as well. He's flagging that once again. We started off talking about Mexico. We started talking about Canada. We've moved on to China now. That was largely absent from the initial hours of Trump announcements, but now they're coming through. And Europe, Kriti, doesn't feel that far behind.
Yeah, it's a fascinating one as well when we're talking about, is this still saber rattling? Is this something the markets even take seriously? You made the point that we went from basically 60 to 0 to 10% in the span of like 5 days. The market's taking a little bit of a hit on it in China, but not as much as maybe we've seen in previous iterations.
I think we just don't know. And as you say, saber-rattling, empty threats, we don't know. February the 1st apparently seems to be the date that we're going to get all this. Is that date fixed? How firm is that date? There's a lot of things that are imponderable here, and we still need details. Are we going to get those details? Does this become real? What impact could it ultimately have? The market, I think, is, in some ways, this is the most difficult scenario for the markets. One way or the other, you get some certainty. Big tariffs, you know what you're dealing with. No tariffs, you know what you're dealing with. Uncertainty, that's hard to price.
You know what I thought was interesting in that entire kind of spiel that he gave was he mentioned the farm deal and maybe referenced it to his very first administration as well. That was the deal. And he didn't just mean it for China, really not even fulfilling quotas, which is what ended up happening with that deal. But even the EU, not buying cars, not buying farm goods, which I thought was interesting, given that the EU isn't really a buyer necessarily of those farm goods. They get most of their grain, for example, from Ukraine, from Russia, from other parts of the world. So to introduce that element to this part of the world, I thought was new.
He just wants to rebalance things. How do you do that? Well, he did. Agricultural products was a big feature of the landscape when it came to China the first time round. Let's talk about TikTok. It seems that everybody's interested in buying this, including Mr. Beast, which I find fascinating. You've got Elon Musk being lined up. You've got Larry Ellison at Oracle being lined up by the Trump administration. The government's part of that deal as well. Fascinating that he thinks the deal is getting done. I haven't heard from ByteDance on the other side to whether it is interested in doing a deal at this point.
Well, they may not really have a choice. And I thought the fact that we've talked about this fact that Elon Musk might have a say here. We knew that Oracle might be interested, given that TikTok is such a big customer to their bottom line as well. But the fact that the government, the U.S. government, might take a stake in basically a foreign entity, that's never happened. It doesn't work the way in the United States, the way that, say, Germany has a stake in Commerce Bank, for example. It just does not happen. So this is really a game changer instead of deal making.
Previously applied rules may not apply any longer. The big story to me is the AI story overnight. That's what's had the biggest effect. Look at what is happening with the Japanese market today. SoftBank is absolutely flying on the back of this. Huge investments. We are seeing the guardrails being taken down. AI, build seems to be the narrative. Drill, baby, drill was the narrative on the energy story. In some ways, these two interact because he's also saying AI can be driven by any energy product you necessarily want.
Yeah, it's fascinating that he's talking about this and really emphasizing and reiterating the fact that this is maybe why the tech CEOs were sitting in front of the cabinet picks at his inauguration for maybe this very reason.
Absolutely. Let's turn back to Davos. That's the other big feature of the landscape we're watching today. Day 3, of course, and we have a great lineup, including the UK Chancellor, Rachel Reeves. She is coming up very shortly. The UK budget deficit data just coming through, 17.8 billion in December. The estimate, 14.2. Rachel Reeves has an accounting problem. Volodymyr Zelensky, the president of Ukraine, we've got him coming up later. Javier Milei, the president of Argentina. That is a conversation that I'm really looking forward to, as, of course, is a conversation with Pedro Sanchez, the Prime Minister of Spain. So some great conversations coming up. Let's kick them off now. Francine is in the driver's seat in Davos. Let's go to her now.
Thank you so much, Guy. Let's have a conversation on banking, global banking, with, of course, the Chief Executive Officer of Barclays, CS Venkat. Venkat, thank you for joining us. I mean, there's a lot going on in Davos. You know, a lot of bankers trying to figure out what the Trump administration means for U.S. banks and repercussions in the UK and Europe. How do you see this playing out?
Yeah, Francine, thank you very much for having me. Well, I'm in the happy position at Barclays that we make about 40% of our revenue in US dollars in the US. So I could sort of have a leg on each side. I think in the US, clearly there is an impetus towards easier regulation, towards a more business-friendly environment, and towards a revival of risk-taking and economic growth, in a real turbocharging growth. In Europe, and we are sitting here in the neutral air of Switzerland, but in Europe, it feels like that wind is blowing across the Atlantic. It's way too early to say, but I think people are hoping that at least some of those impulses towards a more balanced regulatory attitude will come not just into banking, but other sectors of the economy.
What are you optimistic about for Trump's second term, and what do you worry about?
Well, I think the economic changes that are being proposed on regulation and the business-friendly attitudes are very optimistic. We've always, you know, in these things, we've always got to look 2-3 steps ahead, ask ourselves, depending on the changes that come, and it's too soon to say, we're 2 or 3 days into the administration, what could be the knock-on effects in the short term and in the long term. And those are the things we have to study, we have to understand. But I think the basic movement of the pendulum is a good one, and I would hope that movement of the pendulum towards a more balanced regulatory construct happens in Europe as well and in the UK.
Venkat, talk to me a little bit about Barclays. So the turnaround that you engineered is really coming to fruition. You're showing income stability, cost discipline, efficiency savings. So what's next?
Continuing to do the same. You know, we laid out a 3-year plan last year. We've just completed the first year of that plan. We will report on the first year's progress in a few weeks. But we reported on the first 3 quarters, and what we tried to show was progress according to the plan. And that is our objective, is to continue to show that progress on the 3-year plan.
And what's the plan for the investment bank? Again, do you feel vindicated? Because there were calls to drastically downsize the investment bank.
Well, I think on your show last year here, I was very supportive of the investment bank, and I remain so. It is a very good business. It has been an important part of Barclays, and I hope it will long continue to be an important part of Barclays. We've shown good results in both banking and in markets. We continue to retain, in fact, gain market share, been involved in some very important transactions. And so I feel very happy with the investment bank, yes.
But especially given what's happening in the U.S.
Yes.
So this could be really like a source of growth going forward.
I think so. Look, I think in the U.S., we spoke about deal activity going up. It's a combination of 2 things. Interest rates have stabilized. They're high, but they're stable. And so at least people know what they're getting into when they're making financial judgments. And then the second thing is the more business-friendly attitude that may be more admitting of M&A activity. I think in Europe, the economic rewiring that needs to take place will mean an adjustment of ownership of certain companies and entities and practices. So I think on both sides of the Atlantic, there will be greater deal-making, if you like. And I think the financial markets are more stable, but there are still bouts of volatility. And as I always say, if you manage your risk well and you have the right counterparts, the trading business is very attractive.
And that is true also for the UK. I know you've been buying some companies in the UK. Will that continue the consolidation of the financial industry?
Yeah, I think, well, we bought Tesco Bank last year. and we bought Kensington, a sort of specialist mortgage operator, a little before that. I do think even in a more balanced regulatory environment and with interest rates, even if stable but higher, it puts pressure on certain types of business models. And so there may be a changing of ownership in some of the very smaller firms in the UK.
And so, but are you ready? Are you looking at possibly buying other small companies?
So we have an organic plan. Our plan is based on it being organic. I mean, one can always look. But our goal, as I said to you, is to execute that organic plan.
Venkat, we've seen quite a lot of turmoil in UK markets in the last 3 weeks. I don't know whether that puts in the UK in a position of weakness. I know that in the Congress Centre, again, I get a lot of questions from investors saying, is this only Fed-related or is there a problem with the budget?
So I have said, and I'll say it again, I am very confident in the UK. I think the basic structure of the economy, the skill set that's there in the UK, soft and hard, is very strong, very conducive to growth. I think the new government, and it's only 6 months old, has put together a plan which they need to implement, and they need to implement quickly, but has shown all the right signs about supporting business, supporting the financial sector, which employs over 2 million people, is about 10% of the economy, and supporting the other important sectors in the UK, such as life sciences and software. So that's all important. We have to let it play out. The financial markets in the last few weeks have been a little volatile. I mean, gilt yields went up and then they came down, but they did so in sympathy with US Treasuries. Now, the important thing is the US dollar is a reserve currency. No other country in the world has that privilege. And so they have to manage their economics knowing that they don't have that privilege.
But what does the UK need now? How do you get that growth, actually, that makes everything better?
Yeah, I think there are lots of ideas. I think the government is taking the right steps. They need to continue to take bold action, implement, pick a few ideas and run with them.
Venkat, I also wanted to ask you about your payments business. Can you update us on what's going on?
So we're looking to do a partnership in that payments business. I'm not quite ready to talk about what the final answer is. And when we will, you'll be the first to know.
Soon?
Inshallah.
Venkat, thank you so much for joining us.
Thank you very much.
As always, here's Venkat, the Chief Executive Officer of Barclays. With that, Guy, I'm going to send it back to you in London, and then we'll have plenty more throughout the day.
We certainly will. Some great interviews coming up out of Davos, day 3. Francine Lacroix in Davos. Coming up, we're going to bring you one of those conversations. Rachel Reeves, the UK Chancellor. We've just been talking about the country's business secretary. Jonathan Reynolds is also going to be with us. It's a conversation that is about to take place in Davos. We're going to bring it to you next. This is Bloomberg.
We're less than 45 minutes away from the opening trades across Europe. You're looking at the futures picture, and it is across the board in positive territory. Significant outperformance, though, Guy, in the DAX. We're seeing those futures higher about 0.5%.
Adidas.
Is that what that is?
Probably, yeah. It's up 5-6% overnight. Maybe that's the factor.
Maybe.
Strong sales numbers coming through overnight. The ADRs were up really quite strongly. I wonder whether that ripples through into the DAX this morning. Let's talk about some of the data we've had. We're about to go to a UK panel, so let's kind of set that up as we get towards that panel in Davos. UK budget deficit soaring more than forecast. That's the data this morning. The reason for it, debt costs are rising. This feels eerily familiar. This was a warning that was delivered yesterday by Bridgewater's, former Bridgewater, Ray Dalio, talking about the concerns that he had about a debt spiral that the UK was going to be in as debt costs increased. What can Rachel Reeves do to drive growth? That seems to be the narrative that is emerging in the UK right now. Valerie Teitel joining us around the table this morning. Stagflation, debt costs rising. This is quite the cocktail.
It is quite the cocktail. It's very, I guess, shocking to see that those numbers that dropped this morning, $4 billion higher than forecast by the OBR for the public sector net borrowing for the UK, only exacerbates the issue and the pressure on Rachel Reeves. I know we're going to hear from her in a few moments. How will she combat rising yields with the narrowing of her fiscal headroom? Growth is going to be the narrative that I suspect we're about to hear about. Bloomberg's editor-in-chief, John Micklethwaite, is in conversation with the UK Chancellor, Rachel Reeves. Let's take a listen to John's introduction.
I suppose my question is, how vulnerable are we to this, especially given the fact that we've already come out of the European Union? One of you.
I'll start on trade.
Your trades.
Good morning, everyone. It's, going around Davos, making eye contact with all your trade ministerial counterparts, you can imagine what is on our minds, right, and the conversation. But I think there's a few things on this. First of all, yes, the UK is a very globally orientated, trade-intensive economy. That is a good thing. That openness to the rest of the world will be championed by this government, and actually there are opportunities to expand on that. I think that's a unique selling point in terms of our relationship with the Gulf and the trade deal we're negotiating, our aspirations with India, the EU reset, hopefully maybe some things with the US that come out of this, the China engagement that you have kicked off, Chancellor. So, yes, there's a vulnerability there, but there's a strength that comes from that openness to the world as well. So let's recognise that. And the second thing is, look, we understand there is a genuine analysis in the US that feels that the very big trade deficits in goods that the US has, both with the EU and with China, the sense of unfairness that is the proof point of, we understand that. We might disagree, but we'll engage with that. Now, you're right to say we are an incredibly globally orientated economy, but also we obviously don't have that trade. The US does not have that trade deficit on manufactured goods with the UK. Amusingly, I said this to the Cabinet last week, but the UK and the US actually believe we have a surplus with each other on goods because of asymmetric statistical quirks. So there's the basis for a conversation there as to the future. But, it will be a choppy time to be a trade minister. There's no doubt about that. But our job is to navigate through that. You don't get to pick the world as you want it to be. You get the world as it is. And I do believe, the unique pitch from the United Kingdom can be, first of all, a return to political stability, which we appreciate after the Brexit referendum has been challenging in the UK, but that's also relative to some other European countries as well. That pitch to openness, and then I know something you'll want to get into, which is the willingness of this new government to use its mandate, to use the opportunity we have to fundamentally improve the business and investor environment in the UK.
So can I come on to that straight away? Because another piece of news is overnight, you got rid of the chairman of the Competition and Markets Authority, and people conceived that as being a pro-growth, pro-deregulation, because one of the things about Trump is, yes, business people at Davos are scared of his trade wars, but they do like the pro-growth, deregulatory side of Trump. Is this a sign of more things to come in terms of regulation?
Well, growth is the number one mission of this new Labour government. 6 months in, we are building the foundations to deliver that strong growth that has eluded the UK for far too long, more than a decade of very slow, sluggish economic growth. And we want our regulators to be part of that growth mission. Now, of course, the regulators are independent, and the chair of the CMA decided to step down. But he recognised that this government have got a different strategic approach when it comes to regulation. And he recognised that it was time for him to move on and make way for somebody who does share the mission and the strategic direction that this government are taking. So, look, we wrote, myself, Johnny, the Prime Minister, to all of the regulators. There's more than 100 regulators in the UK. We've written to all of them and said, what can you do to reorientate your organisation to regulate, not just for risk, and of course regulating for risk is important, but regulating for growth. I've done it with the financial services regulators. We've now done it with all of the regulators. And I've got to say, the responses we've had, a lot of them have been incredibly positive about things that they can do.
Would you, on financial services, you just mentioned that, would you ever consider ring fencing? We are unusual in Britain in the sense we've ring-fenced banks. We've said, look, you have to put your retail banks separate. In an era where Trump and other people are pushing ahead with deregulation on lots of fronts, is that an area you would also look? You just mentioned financial services.
We'll always keep an open mind about things. Already, since the election of President Trump, the PRA, Prudential Regulator, has pushed back the implementation for Basel III. So that was going to be January 2026. We've pushed that back for a year. We're ahead of the European Union in recognising that the world has changed, and so we've put back that date. I think that shows shows that our regulators are willing to be pragmatic, recognise the importance of attracting investment into the UK and not being out of kilter with our major trading partners and our major competitors. So I think you're already seeing that. We saw the letter from the Financial Conduct Authority to the government just last week about what they might be able to do to drive investment, drive growth in the UK, with a number of practical proposals. That's what this government wants to implement, practical things to make it easier to invest in Britain, make it easier to get things done in Britain, because that's how we drive growth.
There's a very good example of that, which is my third piece of news, which people are talking about, is the idea that next week, there's been a leak ahead of it, that you would say, go ahead with the third runway at Heathrow, go ahead with the expansion of Gatwick, maybe the bridge over the Thames as well. You know, that would be a sign you're prepared to take tough decisions that help growth.
We've already taken a number of big decisions on City Airport, on Stansted Airport, on a number of planning decisions that this government have called in that were on the desks of ministers in the previous government, on housing, on data centres, in the creative industries. I'm not going to sort of comment on speculation about what I may or may not say next week. But Johnny started with a sort of pitch that Britain is an open, trading, vibrant economy. We want to remain as such.
To use your example of taking tough decisions, if you push ahead with Heathrow, that might cause problems with Sadiq Khan, might cause problems with your colleague Ed Miliband from Environment.
This is the problem with the last government. There was always somebody that said, oh, yes, of course we want to grow the economy, but we don't like that investment. Oh, we don't like that wind farm. We don't like those pylons. We don't like that airport. We don't want that housing near us. The answer can't always be no. And that's been the problem in Britain for a long time, that when there was a choice between something that would grow the economy and sort of anything else always won. Now, of course, there are other things that matter, but when we say that growth is the #1 mission of this government, we mean it, and that means it trumps other things. And so we're making pro-growth decisions in the national interest.
I feel, John, as well, I genuinely feel there is, in the UK and perceptions of the UK, at the minute, people haven't quite recognised how resolved this group of people in the new cabinet in the UK are to make these decisions to make a difference, right? And I know the proof points of that are not what we say or what strategies we publish, but the kind of decisions that we seek to make. But when Rachel says growth's the #1 mission, you know, that's about attracting private capital to the UK. That's about getting things done more quickly. There are things we know the UK needs. I mean, look, we could all tell stories of UK infrastructure that, you know, there's a famous example of the M6 toll was sort of initiated under the Callaghan government and delivered by the Blair Labour government. You know, I mean, we've got to do things quicker and better. And I think people don't yet quite appreciate how resolved we are to do that.
Isn't that, I mean, to come to the point, isn't that to do with, in some ways, the budget? I mean, if you talk to people here, they will come up with a variety of complaints. They'll talk about fiscal headroom, which we'll come back to. But their basic point with the budget was they thought that came across as something that was not in favour of wealth creation. You know, at the heart of it, it had big pay rises for public sector workers, paid for big taxes on business. And that is the main thing when you wander around the halls of Davos, you just come back from New York, that you seem to have started on the foot of being people who are not pro-business. So it's not just to do with these past decisions to do with Conservatives, it's to do with that particular thing with the budget. And do you wish you'd done things differently there?
When I became Chancellor, there was this £22 billion gap between what the previous government were bringing in revenues this year and what they were spending. It wasn't some years in the future, it was an in-year gap that hadn't been disclosed to the independent forecasters, hadn't been disclosed to Parliament. You had an idea of it because if you looked at the monthly borrowing numbers, every month it was coming in $1 billion or two above what the independent forecaster had suggested the government would be borrowing on a monthly basis. But until we were elected, we did not know the scale of that inheritance. Now, Now, I said during the election campaign that I would never play fast and loose with the public finances. Liz Truss did that, the previous government did that, and it caused untold damage in terms of borrowing costs and confidence in the UK. So I had to get a grip of the public finances, and that did mean difficult decisions, actually, on welfare, on spending, and on taxation to get the public finances under control. And I strongly believe, and I think businesses instinctively know this too, that stability is the prerequisite for economic growth. You can't grow an economy unless you have that stability. So we've now wiped the slate clean under the sort of economic and fiscal mismanagement of the previous government. It did require difficult decisions. I'm not immune to the challenges posed by the increases in tax. But let's look at the alternative. The alternative was that I did half measures and then everyone would know that I'd have to come back for more next year, or I swept things under the carpet and pretend those problems didn't exist, but they would reassert themselves at some stage. What businesses can know is that our public finances are now in order. We're never going to have to come back again and do a budget like that. So we have the stability upon which we can now build as a government and as a country.
There's a limit, though, how much you can blame back on the Tories. I don't think anyone here regrets the Tories going. But you look at the numbers. The British Chambers of Commerce said that British business confidence is its lowest ebb since Liz Truss's mini-budget. 2/3 are worried about tax. Half say they'll have to raise prices. Firms are already cutting back on investment and employment. The British economy is actually smaller now than when the Tories left.
You've given the bad news. Let me tell you two pieces of good news. PwC survey that came out on Monday, whilst you were here in Davos, showed that we are second to the UK as a place to invest for global CEOs. That is the first time in 28 years to the US. It's the first time in 28 years that Britain has been in that position. That is good news and is a vote of confidence in the UK. The IMF forecast that came out last Friday revised up growth for the UK this year and puts us top of the pack of the major European economies. So we can trade surveys and data, but, you know, I'm here to sell Britain, to talk about the strengths and what we are doing. We're reforming the planning system, we're reforming our regulatory system, reforming pensions, and also this year we're going to be publishing an immigration white paper. And although we know that we need to bring immigration down, particularly illegal immigration, into the UK, we are going to look again at routes for the highest skilled people, visas particularly in areas like AI and life sciences, because Britain is open for business. We are open for talent. We've got some of the best universities, some of the best entrepreneurs in the world, but we also want to bring in global talent into Britain.
There's no complacency by any of us. I would say the challenge of our inheritance has made us even more resolved to do those things that Rachel has described, because we wanted to do them, we thought they were essential. I think that case is even more compelling as a result of what we have inherited. It comes back to this. People should not doubt how resolved we are to make a difference. It's not just about the economic performance, what it means for our constituents. Of course, that's important. It's also about, to be honest, the legitimacy of the political system, showing people that, you know, government can make a difference to their lives, avoiding some of the populist pressures which are evident and discussed quite widely at an event like this. We know what's at stake, and that's why we're going to deliver.
Do you, on this issue, which you hear again and again from people here, this issue of wealth creation, I just saw Tony Blair walking on the street. He was famously relaxed about wealth creators getting wealthier. You've listened to people here, they'll say taxes on business, taxes on wealth, taxes on school fees. You've got small businesses spending all their time now worrying about inheritance tax. Non-DOMs complain, say you're Rachel Reeves, not Rachel Reeves, because they're all heading abroad. The record of left-of-centre governments that are unpopular with business or start on the wrong terms with business is not a good one. You think of François Hollande in France. You know, there is a problem there, and beyond sort of announcing some things around the edge, what are you going to do to change that idea that is out there at the moment, that you're not in favour of wealth creation? Maybe you can correct that now. Look, are you relaxed about wealth creation?
Absolutely, and we want, I just said, the best talent, the best people to come to Britain, create jobs in Britain to grow our economy. We had an international investment summit 2 months into the Labour government. £63 billion of inward investment into the UK, primarily in AI and in clean energy. That is incredibly exciting and shows the strengths that we have as an economy. I'm not going to apologise for the budget because although I hear criticism, what I don't hear is any real alternatives. If you're a CEO or a CFO and you're coming into a new business and you've got these massive problems with your finances, you have to stabilise them. And that requires difficult decisions. But if you don't make those decisions, you're going to be plagued by them for years to come. So we have now wiped the slate clean. Businesses can be confident of that. My instinct is to have lower taxes, less regulation, make it easier for businesses to do business. But unless you can have that economic and fiscal stability, then, to be honest, I think that you're not going to have any serious plan for economic growth. We saw that under the previous government. We've seen that governments around the world that get into financial difficulty. We have avoided that through the difficult decisions that we've made. But on every other area, I think businesses will say, on regulation, on planning, on pensions, on capital markets reform, that we are doing the things that are needed to unlock economic growth.
I'm going to come back to the issues of other things you could do in a second with Johnny, but first with you, this particular issue of stability and the issue, as you know, about fiscal headroom. You know, you left yourself a very small kind of buffer. I looked at 0.3% of GDP, or to put it another way, that's $9.9 billion, £9.9 billion against total public spending of more than 1.3 trillion. So very little margin for error. You've seen all those moves in the bond markets, which you'll point out have been corrected, but each time that happens, it kind of pushes through the buffer. You know, are you at some point going to have to make a bigger buffer at some time?
I set out the two fiscal rules that this government will meet. The first is that we will pay for day-to-day spending through tax receipts. Previous government didn't achieve that in 14 years. And that we would bring debt down as a share of GDP. We meet those rules 2 years early. We meet both of those in year 3 of the forecast at the moment. And in the final year of the forecast, there's a £9.9 billion amount of headroom. That is more headroom than we inherited from the previous government. We actually put more money into increasing that
theirs was a famously small amount as well.
Yeah, so it's tight. And those fiscal rules are important to us because they are the sort of bedrock of foundation of that stability that I've spoken about. So we will continue to make decisions to ensure that we meet those fiscal rules. I'll just say another thing about the fiscal rules and why we chose to pay for day-to-day spending through tax receipts. That is so important for this government to get a grip of day-to-day spending because that allows us to free up money to invest in capital infrastructure projects, whether that is energy or transport or in tech, compute capability, for example. And we're only able to unlock £100 billion during the course of this Parliament for those capital projects, additional £100 billion, because this government are getting a grip of day-to-day spending. And some of you would have heard our Chief Secretary to the Treasury, Darren Jones, and our Science and Innovation Secretary, Peter Kyle, yesterday speak about the possibilities that tech have to transform our public services, to get better value for the money that we put into them by using tech better. The creation of a government digital app that will have our driving licences on and other things by the end of this year, using tech to cut out some of the costs in the back office functions of government. The more costs we can take out, the less we have to do on the tax side, the better services we will deliver for citizens, and the more we can free up to invest in that capital, the projects that can help transform our economy.
Sounds as if you're going down the same route as Elon Musk with his Department of Government Efficiency.
Well, look, we want to root out waste in government spending. I think maybe the
first comparison you've had
there. I'm not going to go control presidents.
Just one last thing on that the fiscal headroom. You've got the Office of Budget Responsibilities forecast updates at the end of March 26th. I suppose my question is, can you leave it that long? If you're riding a bicycle and you hit the curb twice, you tend to move a bit closer to the centre of the road, don't you? You've already had two instances where the sheer rise in borrowing costs, which occasionally happens, could have wiped out that buffer. Isn't that something you're going to have to deal with eventually?
Well, there's been undoubtedly global movements in financial markets this year, mainly driven by the US, but of course the UK gets caught in those headwinds. The Office of Budget Responsibility are just starting their forecast process, and they don't take into account just 1 week's moves in financial markets. They look at a period of time. But I don't think we should get ahead of ourselves. There's a couple of months before that OBR forecast is published. I will respond to that in the proper way and make sure that we continue to meet those fiscal rules.
Johnny, can I come to you on the issue of growth again? It strikes me, you look at a lot of the things you've been talking about, the Chancellor's been talking about, planning reform, infrastructure strategy, pensions reform, making regulators more friendly. Those are quite kind of long-term things, whilst what business is looking for desperately is something short-term to make up for the tax rises. Is there anything you particularly can sort of focus on there?
I would come back a little bit on that, John, because I think what business wants to fundamentally see from us is, are we good for our word? When we say growth's the mission, how are we going to prove that? How are we going to convince people that that is absolutely where our political priorities will lie? Exactly as Rachel has said, they've heard from other people, other governments in the past. They want to know when you get that countervailing pressure, oh, but what about this? What about that? What about that person not liking it? Are we going to say, no, this is the mission and this is the imperative? And we are. So I don't think it's about people just banking the long term, because the one thing the UK has needed in the last few years is more of a long-term, serious focus. Let's be frank. We've been bobbing along from one Prime Minister to the next, sometimes month to month, right? So they want that long-term focus. And I think that's where you get the confidence. If people do not look at the UK, they risk missing out, right? That's genuinely the case, because this is a government so resolved to make the difference, because we know that is what we have to do. So I don't think it's a question of, OK, people think the long term's great, they want the short term. They want to see that long term following through and the commitment that comes with that. And then they will see when, some of the pressures, some of the conversations about the global trading position, the leadership role the UK will take in terms of open markets being a key part of that. I mean, as we both said, we want to stress, we recognise the challenge of our inheritance and how we've got to, provide people with the confidence and the certainty for the future. It is important to say we're still, you benchmark, payroll taxation in the UK still very internationally competitive. Capital gains tax, corporation tax lowest in the G7 with the best allowances available. So there's a compelling competitive offer there. But what you need, I think, to generate that confidence is people recognising this is a government serious about building.
Surely the single thing that you could do that would give the most amount of growth is to do a fresh deal with Europe. To do something like a customs union. That's what virtually every number that people have run on that shows the biggest increase in GDP compared with all the other things you're talking about.
It's first of all, will this debate ever end? I mean, I think
didn't
about
say rejoining the European Union. I said something akin to a customs
I would say
union.
something like this, that first of all, we want, and again, there's a high degree of ambition on our side, a reset of that relationship with Europe. And there's a whole range of specific elements to that, the SPS proposals, the recognition of mutual recognition of qualifications, the regulation of goods in particular. We're up for an ambitious conversation about that. I do think, again, people sometimes fail to recognise that, the evident problems, the challenges of leaving the European Union for the UK were obviously about a significant change in our terms of trade, but the political uncertainty that came with that was also a real problem. And so our decision to not relive, not to refight those arguments, but to focus on improving that relationship, practical things, as well as build those relationships with the Gulf, with India, maybe the US. Look at how we've been an outlier in terms of our lack of engagement with China. How can we, turn some of that around? Difficult, but important to do. And I think that is a much more comprehensive approach. And I think you've got to recognise, if you're, as we have done, leaving something like the single market, there's a cost there. You have to mitigate that. But I think a conversation just about Europe, honestly, it's not enough in its own right to give the UK the platform it needs.
You see yourself, Chancellor, in competition with Europe to some extent? You have a lot of international business people here. Somebody yesterday said that Britain's claim to fame is we could be the tallest tree in a not very tall forest, which was Europe. You look and see what's happened to Germany. You look and see what's happening in France at the moment. Do you see yourself in competition with Europe for international capital?
Of course. We want jobs and investment to come to Britain. We're here to represent the UK and all of our strengths. And look, you know, Johnny and I both voted to remain in the European Union, but we're outside the European Union. We have been for, it'll be 9 years this summer. We've got to move on. There are opportunities outside of the European Union. Opportunities, for example, in AI, where we have a very different regulatory approach to AI compared to the European Union's approach. That makes Britain a more attractive place for AI and tech companies to invest than in other European countries. We should take advantage of that. We should shout about it, and we should get that investment in. Just in the 6 months that we've been in office, £40 billion of private investment into AI and tech into the UK. That's really exciting. I think some of that has come to the UK because you look at the UK compared to other jurisdictions, and we are a better place to invest. Take, for example, the Basel reforms. As I said, we've gone ahead of other European countries. We have that flexibility. We can be more nimble. We are taking advantage of that. That said, I was the first British Chancellor to go to the Eurogroup meeting of finance ministers in December in Brussels. We do want a reset of our relations. We don't want the antagonism and the battles that the previous government seemed to quite relish. It's why also I went to Beijing and Shanghai last weekend to re-engage there, the first economic and financial dialogue between our two countries for nearly 6 years. Got tangible benefits, particularly for financial services, quotas and licences for British businesses doing business in China. So we are re-establishing ourselves in the global space, getting good deals for Britain, and that's what our jobs are, and that's what we're doing.
You talked earlier about making government more efficient. We made the joke about Elon Musk, but there was a point behind that. One of the complaints that business people had about your budget, there was this very large pay rises going out to the health and things like that, but without a kind of attached bits of reform with that.
Yeah.
I mean, if you're going to make government more efficient, you'd like to see more evidence that that's actually beginning to happen.
Well, let's just remember where we were on the NHS when we came into government. There had been so many strikes that was having a detrimental impact on business as well as individuals. Because when people are waiting months and months, sometimes years, to get the appointments and the procedures and the operations that they need, they're not available for work. We've got a problem in Britain that participation in the labour market is lower than it was going into the pandemic. We've got to sort that out. Some of that is about reforming the benefits system. We're going to do that. And some of it is about making our National Health Service work better. I don't think there's a business person that would have said 7 months ago before we came into office, you know, everything's fine with the National Health Service and making sure we've got a healthy labour market. That was a problem, and we fixed it by resolving that industrial action that had plagued our National Health Service for a long period of time. But, you know, Wes Streeting, our Health Secretary, is absolutely reforming the National Health Service, making more use of the private sector, for example, more drop-in clinics local to where people live, using technology better so that people can choose when and where they have their appointments. So we are absolutely using reform alongside making sure that we resolve that industrial action. Another area where there's massive opportunity in the NHS, going back to this issue around tech and data, is using data in the NHS to bring in money, but also to make Britain the best place in the world to do clinical trials. Massive opportunities there because of our integrated health service.
Something you said earlier, I think the message you were trying to put across is that your first priority is going to be to sort out spending now. Now you've got everything, hopefully, on a firm thing. You're going to sort out spending before remotely thinking about the chance of more taxes or anything like that. And if you would actually also like to cut taxes in the future.
I would like taxes to be lower on people and on businesses, but I'm not going to play fast and loose with the public finances, because in the end you actually don't result in anyone being better off, because it sends interest rates soaring if you lose control of the public finances. So I'm not going down that route. But if we can run the state better, if we can run public services better, if we can bring investment into the UK and grow the economy, we don't have to keep ratcheting up taxes to make the sums add up. That's where I would like to be, but we're not in that place yet.
But is there a certain level of growth, a certain level of something where you think you would then feel happier about reducing taxes again?
Well, look, I would like to reduce the burden of taxes, but I'm not going to make promises that I can't keep. Previous governments here and around in the UK and around the world make promises they can't keep. I'm not going to be that sort of Chancellor. We're not going to be that sort of government. But I think you can see my instincts is to do everything I can to make Britain a great place to do business and to invest. As Venkat from Barclays, I think, was saying yesterday, there's huge potential in the UK. We're just 6 months in as a government. We are taking the steps that are necessary to grow the economy. Can't turn everything around overnight, but I think people can see in all of the reform that we're driving forward that we are determined to turn around the low growth performance that has dogged Britain for too long now.
And I would just say on that, I mean, from my perspective as a government department, I'm absolutely convinced we could spend money as a country in a better way. You know, our industrial strategy is partly about coordinating government policy across a whole range of departments. I look at how we've done that as a country in the past. Did we get the effectiveness of that? You know, when we look at the different regulatory burdens in different departments, who considers the aggregate burden on business? I'm convinced we could do that. And we know, the media always want to know, you're going to spend more or less on something, or regulation more or less of it. It's not that. You know, it's about the proportionality of those things, the effectiveness of that. And we're up for that conversation, because that's how we'll make the biggest difference.
Rachel Reeves and Jonathan Reynolds, I'm very sorry we're out of time, but thank you for very robust defence of your policies.
Thank you.
Bloomberg's editor-in-chief, John Wickerthwaite, of course, there speaking to the UK Chancellor, Rachel Reeves, and Business Secretary and Trade Secretary, Jonathan Reynolds. Kriti, the data speak maybe to a different story at the moment out of the UK. They're talking about growth. It's going to be interesting to see where the pound goes.
Well, yeah, and where the gilts market goes as well. Let's bring in an expert here. Markets Live Executive Editor Mark Cudmore joins the program. Mark, we were talking so much about the fiscal policies of the UK, but ultimately when it comes to the gilts market and potentially the pound as well, is the ball really in the US's court?
I think that there are two genuine drivers here in the UK. Normally you can identify that it's all about the macro or it's all about the domestic issues. I think UK has two very real drivers. I think there's very genuine concern about the UK's twin deficits and what's going to happen over the next year, and the poor growth outlook. And that is exacerbated by what's happened in the macro level and at the uncertainty coming out of the US, both in terms of what might happen on the inflation side because of tariffs and of the disruption to global trade from tariffs. Now, on that tariff point, I am getting more optimistic by the kind of minute because I think the whole world is getting really, really caught up on these tweets and threats that we're getting out of the new US president, despite the fact that this seems to be the exact same playbook that we had 8 years ago. And you know, things took a long while to get delivered. It does not mean we're not going to get any tariffs, but they're going to come through much later than originally planned. They're not going to be as aggressive, at least at the moment. You know, we already know that the earliest we're going to get something is 1st of February. And I can't think anyone seriously believes we're going to get 25% tariffs on Canada and Mexico on the 1st of February. So most likely we've got a good few weeks window, and each of those tweets and threats will have diminishing marginal impact. So I actually think it's a good setup, because we have people scared of the market because of all those tweets and tariff threats, and they're going to slowly be forced in over the coming weeks, essentially climbing that wall of worry. It's going to squeeze people into the market. So from a macro tariff point of view, I'm getting increasingly optimistic. Now, there are other drivers out there, I know.
Yeah. There is a growth story as well. Certainly the Trump administration is already pushing the deregulation story, the AI story, plenty of other stories as well to drive the economy forward. Is there a cost to that? Should we be thinking less about rate cuts in that kind of environment? How finely balanced is the rate cut, rate hike debate, given all of that?
I think it's extremely finely balanced. I'm in the camp that it's completely rational to consider that the next move from the Fed might indeed be a hike. I just think you can't have much certainty out there. I agree that the disinflation path worked out much better than I anticipated last year. It's gone pretty well. But I think that ultimately, I don't see why the Fed would be cutting rates again unless we see a hit to growth. Now, we could get a hit to growth if we do get sudden aggressive tariffs. That is absolutely possible. I'm not ruling out that we still may get an aggressive rate cutting cycle later on this year. But I think that for now, the Fed doesn't really have a clue what the next move is, because at the moment, everything we're getting is pro-growth, and it's positive for inflation in terms of higher inflation, which means it looks, at the moment, we're going to increasingly kind of want to squeeze out some of those rate cuts that are still kind of, the market is still kind of base case expecting. But then if we suddenly, in the second or third quarter, get aggressive tariffs and we get suddenly growth derailment, well, absolutely rate cuts come back in the margin. So it's extremely finely balanced. And if anything, for the moment, I think there's a little bit of upward pressure on yields in the short term in line with that risk-on sentiment.
Certainly something we're going to be keeping a very, very close eye on. 458 on the U.S. 10-year as we speak. Bloomberg Markets Live executive editor Mark Cudmore there with that macro analysis. Let's go from the macro to the micro. Get our stocks to watch with Joe Easton. Joe.
Morning, Kriti. So Adidas beat forecasts on both its sales and margins in an update after the close of trading yesterday. And we saw the ADRs jumping in the US around 6% in terms of the move higher on that one. And this should potentially continue that recovery for the stock that was hit a couple of years ago by the end of their pact with Kanye West. So we should potentially see that continuing in terms of the rise today. Then in terms of airlines, we've got EasyJet out beating expectations on bookings and also saying they're going to see their holiday business increase sales by around 25% in the year ahead in terms of their guidance on that partnership. It has done okay over the past year or so in terms of the peers, and 16 buys on the stock, not a single sell rating, and very much a favoured airline in the European space. So do keep an eye on that one today. Then we've got Alstom out as well. The important thing on this is their cash flow update. It does look like their cash flow is in line with expectations. A couple of years ago, this stock had a big drop when they actually slashed their cash flow due to rising debt. So we could potentially see that one gaining today. One to watch in the French market. Their train orders looking pretty strong as well. In terms of your ratings, Air France gets an underweight. Now that one is over at Barclays. Now, I do think these are the wrong ratings, but I would note that we do have a downgrade for ST Micro. I think that was the one I was going to bring you. I'll have to check what I put into the machine there. Keep an eye on ST Micro in French trading today.
Certainly something I'm going to be watching very, very closely. Joe Easton there with our stocks to watch. We thank you so much. And, of course, as Joe was speaking, he started off that segment talking about the future space. DAX futures flying right now relative to the rest of the continent.
Looks like BMW is going to have a good day. Looks like Adidas is certainly going to start off strongly. The European market open is almost upon us. We are 5 minutes away. We will bring you that next. This is Bloomberg. Wednesday the 22nd, good morning. Couple of minutes to go until European equities start trading. Let's talk about the legacy from yesterday and what it means in terms of the European story this morning. I would argue not very much. The white line here, obviously the European markets, the US is the blue line, as you can see, closing out without much real sense of direction going into the following session. So let's look at some single stock stories. Let's figure out what is going to be moving these markets around. The futures maybe tell a little bit of what Kriti is about to bring us in detail. Euro Stoxx 50 futures not doing very much. We've already talked about that. The FTSE's barely moving this morning. But look at DAX futures. There's a bunch of single stocks that you may want to pay attention to this morning. BMW is one of them. Adidas, certainly another one of them, Kriti.
I admire the effort. It's Adidas. Good try. The earnings jump is a pretty big one. Those really strong sneaker sales in the holiday kind of era did actually boost the ADRs quite a bit in the last 24 hours in the States as well. So maybe that's going to show up, as Guy was mentioning, in the Germany stories. Well, remember the car makers that he mentioned one just a moment ago. They were really sold off yesterday, so we might get a bit of a boost there as well. EasyJet coming out with some pretty decent numbers when it comes to their load factor, when it comes to their revenue. We'll see if that moves moves as well. And then Alstom also very much in focus. We know they have a lot of infrastructure projects on docket right now. Their third quarter sales beating estimates in a really big way. Does that give it a little bit of a boost to the French index and to the stock 600 broadly? But I think the thing to keep in mind is these are three positive individual corporate stories, Guy, that you are seeing from three different parts of Europe.
It's going to be interesting to see how that all folds into the market narrative that is so top-down, so Trump-driven at the moment. Let's find out. European equity markets are about to open, keeping a careful eye on the single stocks this morning. But let's show you some big-picture numbers and get you going with this Wednesday trade. FTSE 100, straight out of the gate, and doing very little. We're not anticipating much movement from any of these European markets today that don't have the single stock narrative attached to them. So the FTSE feels like it could be one of those stocks this morning. We're going to watch what happens, though, more carefully elsewhere. The stock 600 up by 0.2%. We're waiting for Germany. We're waiting for France. Germany, I would argue, probably the big story that we're going to be seeing single stock stories emerging from today. Adidas, Adidas, we're going to watch that carefully. BMW, the car sector, more broadly. Is there an AI story read across? We've seen that represented very well out in Asia as well. Are we folding in a Trump tariffs narrative this morning? Feels a little less of that narrative maybe in the market this morning. So the IBEX absolutely flat. The CAC up a little bit. The FTSE 100 absolutely flat. The stock 600 maybe incorporating a few German stocks up by 0.3%. Kriti, what else are we seeing below the surface? What does the sector story look like? What are these single stocks doing this morning?
Well, right out of the gates, as we, of course, are waiting for some of those volume hitting the German indexes, is the healthcare story. And when you're looking at the index contributions here, right off the bat, I'm looking at Novo Nordisk, I'm looking at Roche, I'm looking at Novartis. Those seem to be some of your biggest movers to the upside, sprinkled with a little bit of that tech story as well. I wonder how much of that is that AI conversation we were having in terms of the AI infrastructure investment going into the States as well there. So Schneider, SEP, ASML, again, mixed with some of the biotech space is crucial as well. I'm getting some headlines here that Roche got FDA clearance for one of their Cobas-Liat molecular tests, so perhaps that helping as well. But really, that heavy volume, Guy, concentrated on the upside, at least, in tech and in biotech.
So, yeah. In terms of the German market, we're waiting for details to come through. We're just getting some single stock names coming through. So Munich Re's up by 1.5%. SAP, to your point about what is happening with the tech story, the big tech driver of the German market is up by over 1%. I'm waiting to see some clearer sense of direction coming out of the other sectors. The car sector in particular, we're watching very carefully. We've got a few names through. I've yet to see a trade on Adidas. It's yet to trade on the German market this morning. There's a bunch of German stocks that still are yet to open. We'll see what happens there. But interestingly, we were talking about what's happening with the car sector. Actually, some weakness emerging there. You've got Porsche down, you've got Mercedes, Volkswagen, Conti, all trading lower this morning. It's also interesting that Infineon not doing a great deal this morning, despite actually maybe some tech focus coming through. So we're waiting for Adidas to trade. It's one of the two single stocks that we're still waiting for numbers to come through on. When that comes through, I suspect we'll get a pop to the upside.
And on those car makers, we are getting some analyst moves as well. BMW getting that upgrade. Mercedes and Porsche getting downgraded over at Berenberg. So perhaps that creating some movement in the markets as well. As we, of course, are waiting for that German index, it's worth mentioning that you are seeing some of the commodity names take a little bit of a back foot here. This is another second trading session that you've seen that happen in the UK. Glencore, Rio, Shell as well, and BP, all some of your biggest index weights as we get closer and closer to maybe deciding a little bit of that. Again, we are still waiting for some of the opens on how the German index is performing, but as we get that, we will bring that live to you. Let's go a little bit macro here, though, because as Guy said, maybe it is a little bit of a top-down approach. Really what happens out of Washington, D.C., maybe driving the markets globally. President Trump, of course, saying his threat to hit China with 10% tariffs on all imports is still on the table, and it could come as soon as next month. Joining us for more on that, let's bring in Bloomberg's Valerie Teitel. Valerie, do we care about this, or is this priced in?
Well, the one interesting thing that he did say with these China tariffs is he mentioned this date again of February 1st, meaning we maybe are 2 weeks away from a big announcement from the Trump administration on tariffs. The other interesting thing, Kriti, is he has not mentioned tariffs when it comes to Europe. He mentioned Canada and Mexico yesterday. He mentioned China overnight, but it seems like his focus really not on Europe at the moment. And perhaps, hey, that's a sigh of relief for the euro and maybe for those at Davos.
He made some comments. So he talks about Europe not treating the US very well. He made those comments yesterday. As you say, though, not delivering the kind of detail that we're seeing. So we've yet to see a number attached or a date. But as you say, this 1st of February date, is it risk on until then, therefore?
I mean,
do you focus on the growth narrative?
Yeah, well, at least that's what the market overnight has taken to it, seeing equity futures in the green. But before we get to February 1st, we have next week, we have the Fed meeting. We also have the ECB meeting. So maybe a bit shifting from the politics back to any guidance that we get from the central bank. Just what do Fed policy members make of the Trump administration? I'm sure Powell will be asked a lot on that. But back to your growth agenda, I think it's very interesting to note that what's going on in Davos, the things we're hearing from CEOs, they're not being combative to Trump. If anything, they are touting, hey, let's look at the U.S.'s example and think about how we can apply it to Europe. Yep. And that is a very big shift when it comes to, the trajectory for regulation in Europe. If we perhaps see, different tariffs being put on the car industry, for example, if they do think about how we can help the car industry here at home versus those other things that Europe has done that has, frankly, hurt its own car industry instead of standing up for it.
Yeah, well, speaking of that car industry, the DAX is now officially open here and outperforming the rest of the indexes on the European continent. The underperformers, though, are, as you mentioned, those car makers. So Porsche, Mercedes, Volkswagen, all taking a little bit of a beating this morning and kind of counterbalancing that massive move in Adidas that we were expecting, higher by 5.4% at the moment.
Is this concern around tariffs? Is this concern around... Is this just an upgrade-downgrade story this morning that's hitting that sector? Is it something that we've been waiting for? We've seen some big movements in this sector over the last few days. It's hard in some ways to pin down exactly what is going on here. There was an opening salvo, a very gentle opening salvo, to Val's point yesterday about Europe. Where do we go with that? We don't know. But that was the first time I've heard Europe mentioned. He didn't really talk about it during the inauguration a great deal. Yeah. So is that maybe, can we fold that, can we apply that to what we're seeing maybe with some of the European sectors this morning?
But also, is the European playbook in terms of trading that the same as the way it's trading Mexico, Canada, China headlines? I mean, you did a great job. Every time we get those headlines, you see a sell-off in Chinese assets. You get a sell-off in the peso. You get a sell-off even in the Canadian dollar. You don't necessarily get a sell-off in the euro when he mentions the EU.
Yeah, look, I mean, there has been a lot of thoughts about euro parity, euro on the downside, this kind of dismal thought on Europe. But if we do see an about shift from some regulators, some CEOs calling for, hey, Europe, we need to do what the U.S. is doing and protect our competitiveness when it comes to our key industries. I mean, that would be a sentiment change, I think, for those out there wanting to be, bearish on the euro, being, short. European
it's much easier to do, though, if you've got a president that can pull the levers, whereas here in Europe, there are multiple countries, multiple jurisdictions, multiple incentives.
The seems to be growing, which is positive for the risk framework for European assets.
OK. We'll see whether that has got legs. Valerie Teitel, thank you very much indeed. Let's take a look at the core six this morning, figure out exactly what is going on at the centre of gravity of Europe. This is the picture, as you can see. Tech does seem to be getting a little bit of a boost this morning. Schneider's up, ASML's trading a little higher as well. So weakness maybe in the luxury space, but not much. Novo's having a much better day. Let's talk about some individual names, figure out what's going on there. Joe has the details.
So we are seeing a gain in Adidas shares today. I'm going to go with Adidas rather than Adidas, despite what Kriti will say. But Adidas gaining around 6% at the moment, and also seeing a bit of a gain in Puma as well, rising around 2% at the open. Now, remember, Adidas did report a jump in their sales and also their margins looking pretty strong, recovering from the drop in that relationship with Kanye West that we've covered before in the show. And seeing a bit of a feed through as well. Puma gaining, Frasers as well. JD Sports not seeing too much reaction. Definitely a sector in focus today. Then in terms of EasyJet, that one was looking higher in the indications, but actually now lower, down around 4% at the moment. Now, the bookings look pretty strong. They have maintained their outlook, but potentially seeing some of cost growth coming through in that one, and therefore not actually gaining today, falling in terms of EasyJet, down as much as 4%. Bit of a surprise on that one. Then in terms of Trainline, this one just coming into our radar. We had an update from the Department of Transport in the UK last night saying that they are pushing ahead with their plans to consolidate the booking platforms on trains in the UK for the rail companies, and therefore that is a competitive threat for Trainline. We're seeing that stock dropping around 4% at the open for the UK-listed company. Then over in Amsterdam, we've got Universal Music, an exclusive from Bloomberg, saying that an unidentified shareholder is looking to offload some stock, around 200 million quid worth of stock in the company responsible for Taylor Swift's music. Of course, that one coming down a little bit at the moment this morning in terms of the Amsterdam stock. Then on the ratings changes, we had ST Micro, a very rare downgrade. This one coming through from Barclays today. They're saying they're seeing a split in the semiconductor companies due to the demand coming from China, and ST Micro is not one of the ones seeing the strong boost from China at the moment. So therefore, that stock declining today as Barclays cuts to underweight. Only the second bank with an underweight on that stock. And finally, BMW, as we've mentioned, that one is gaining today. This one getting an update at Berenberg. They've changed the ratings, as you guys have been discussing, on a number of stocks. They've downgraded Mercedes, I believe, but they like BMW due to its latest launches in terms of its new models. That one getting 1%, 1.1% for BMW in Germany today.
Joe Easton there from our equities team walking us through some of those early movers. We should mention if there's one sector that's on the back foot today in terms of stock market performance, it is the banking sector. We're going to continue the conversation on that banking sector and return to Davos, where our own Francine Lacqua is standing by. Fran.
Kriti, thanks so much. We're joined by Bill Winters, the Chief Executive Officer of Standard Chartered. Bill, as always, you're a Davos regular. Thank you so much for joining us. There's a lot going on. I'm sure you get stopped in the corridors saying, what will Trump do? What does it mean for the economy? What do you answer?
Well, what we know so far is that the animal spirits have been unleashed. Right? So people are looking at ways that they can invest around the themes that they think the U.S. is migrating towards. No surprise in his early actions so far, but the big questions on the economy are where are we going to come out on tariffs, and where are we going to come out in terms of the engagement between the U.S. and China, and what's that mean for the rest of the world? And those questions are still looming.
How do you see U.S.-China playing out actually for the banks, especially as we're expecting this wave of deregulation in the U.S.?
Look, I live in hope, and the hope in which I live is that there can be an entente. I don't think we're going to see some sort of a big rapprochement between the U.S. and China, but I think there can be an understanding about how we can cooperate together to get some really important things done in the world. There's some really obvious ones like climate change, which is unlikely to be the natural point of engagement between the Trump administration and China. But the system for global trade is a second. And we all know the world in aggregate is better off if we have free and fair trade. But we also know that people have been left behind, and Trump's been very, very straightforward in his determination to change the rules. We'll see.
But when you hear Donald Trump actually say tariff is his favorite word in the English dictionary, do you believe him at face value, or is everything a negotiating tactic and a starting point?
Well, I think ultimately everything is a negotiating tactic kind of for everyone when you're trying to change the status quo. And how deep is his conviction, and how much does he really believe things need to change, and how much can things change? Right? There's a limit to how much flex either side has in a negotiation. It really is an open question, and I think the market is as unclear on that question as it's ever been.
Okay, how does it change how you want to run the bank?
So we run the bank for our clients, right, just as a practical matter. And our clients have been diversifying their supply chains for the past 8 years. So obviously there was the first round of Trump, although the tensions between China and the U.S. have been going on from before then, and we know they carried on with Biden very, very strongly. So we've diversified supply chains. COVID actually threw a different spanner in the works in terms of security of supply. But we've also got many countries around the world who have developed outstanding manufacturing bases of their own. Think about a place like Vietnam or increasingly India. So that's been ongoing, and our job is to help them get from where they are to where they're going in a seamless and effective way. And I'd say so far that's going well.
So do you want to increase your presence in the U.S., be there for your clients?
No, we've got a good presence in the U.S. We've got a very good presence with our corporate clients and financial institutions in the U.S., most of whom are operating back in Asia, Middle East, and Africa, which are our home markets. But it's a big market in the U.S. and lots of opportunity for us to engage on terms that make sense for us and for them.
Your share price, it's going in the right direction, the direction you want it.
Yes.
Is this a landmark point?
I don't know. I think we've got a lot further to go. I mean, our share price has gone up because we're making more money, and our earnings are improving. And our earnings are improving because we've got some really good strategic positioning. Everything is cross-border, especially if there's an Asia, Middle East, Africa anchor, and then serving the affluent and the aspiring affluent. And this is kind of what's a little bit different about our private banking and affluent banking effort, is that if you go into India or even into Korea or Indonesia, we've got people who say, like, I'm not really rich yet, but I want to be rich, and I want to find a way to manage my money so that I can grow and become wealthy and retire comfortably and leave something to my children. And those are the people that are attracted to Standard Chartered. And we're on top of that one. It's going well.
So how much do you think your share price can rise by?
Yeah, I wish I could answer that question. We're trading below book value. We're still trading below book value, which doesn't make any sense to me given the returns that we're generating. But hey,
Okay, so what's the winter's target? You must have a target. This was like you reached where you wanted it to be so far. What's next?
We have a 30% return on tangible. Approaching 30% is the actual guidance that we give in 2026. We'll announce our full year earnings in a few weeks. And you've seen the U.S. banks have reported they've been very strong. We're participating in the same markets. So I feel very good about our prospects, and I see that playing out for some time. And I think if we make more money and if we do a good job for our shareholders, our share price will go up.
Okay, do you have new targets that you'll announce?
We will announce new targets when we announce new targets. But as you know, Francine, no doubt I'll be in your studio in London.
Okay. It's a deal.
Talking about that in February.
Okay, talk to me a bit about your Fit for Growth strategy, right? Yeah. Again, are you there? Are you going to do more? Like, is this mission accomplished for Bill Winters, or are you like 75% there?
No, it's never mission accomplished. No, so Fit for Growth is. So I've been in Standard Chartered for 10 years now. For the first 7 years, our expenses were basically $10 billion, flat. We had a pickup around inflation, and because performance was improving, we told the market we're going to cap our expenses in 2026 at $12 billion, right? And that's going to require us to do some ongoing productivity, which we do every year in any case. Fit for Growth is a great opportunity to be a little bit more strategic about it and really change the way we do business. So far, so good.
Okay, what's one thing that you worry about in this year, actually in the next 12 months?
I worry about all sorts of things. I worry about the U.S. economy overheating and getting an inflationary thrust, which drags everything back. We all know that higher U.S. interest rates and a strong U.S. economy mean also a stronger dollar, which is tough for emerging markets. So we were seeing the beginnings of meaningful capital inflow back into emerging markets. That's pulled back now. So I do worry about that U.S. economy overheating. Of course, the geopolitical tensions are always with us. But I think for the moment, it's maybe because we're in Davos, we can be hopeful that there's the prospect of peace in the Middle East, right? We can imagine the prospect for peace in Europe, but that would require an entente between the U.S. and China that could also happen. So while we're fantasizing, let's. Yeah.
But it just feels like it could be a very volatile year on all fronts,
I think
especially
it's likely
markets.
To be a very volatile year. I think that the economy is going through a transition. The U.S. is clearly at full employment, but still with a very large budget deficit. So we'll see volatility in interest rates. We'll see volatility therefore in foreign exchange rates.
Yeah. Is that good for banks? Is that good for Central?
It's very good for us. And it's good for us up until the point where it really hurts our clients. Once the clients are feeling pain, of course, then we feel some pain as well. And the volatility so far has been okay. I think a secular increase in U.S. interest rates or a failure to decrease would begin to really hurt clients in the U.S. and in the rest of the world.
A lot of banks are thinking about succession. How do you think about that?
I think about it all the time, and thankfully I've got a really good group of direct reports. Running our corporate bank, running our retail bank. We have a CFO that joined us a year ago, and any of those people could run Standard Chartered. So if I fall off that edge tomorrow, the Standard Chartered will be fine. We also go through the ordinary course of chairman succession, and our chairman he joined just after me, so he will hit his 9-year point over the course of this year. Thankfully, we've got a deep bench on the board. We've got a deep bench in management. So, but it's the job of the chairman and the CEO to make sure that succession is provided for. I think we've done a pretty good job.
Okay, Bill, thanks so much. And you're not falling anywhere. We'll make sure you get safely off the chair as well. Bill Winters, of course, the chief executive of Standard Chartered. With that, I'm going to send it back to you in London, and then we'll have plenty more throughout the day. Kriti.
Bloomberg's Francine Lockwood there in Davos with none other than Bill Winters, the Standard Chartered CEO. We thank you so much. Let's go from the banking sector to the technology to the media sector. Coming up, Netflix posting a record quarter thanks to live sports coverage and the return of Squid Game. We're going to dive into the details next. This is Bloomberg.
we are constantly trying to broaden our programming, and live events is one of those things, and sports is part of that those live events. So when I look at this and say that's a really fantastic thing, but but it doesn't really change the underlying economics of full season big league sports being extremely challenging. So if there was a path where we could actually make the economics work for both us and the league, we certainly would explore.
The Netflix co-CEO Ted Sarandos speaking there about the future of Netflix and certainly broadening out that programming. Netflix shares in the meantime have soared in after-hours trading after its biggest quarterly subscriber gain in history. Now, the return of Squid Game and its first major live sporting events saw the streaming giant add almost 19 million customers in the fourth quarter. Let's dive into the details here. Joining us for more is Bloomberg's entertainment reporter Sohee Kim out of Seoul. Sohee, walk us through these earnings.
Right. Good morning. Netflix reported solid earnings with a record 18.9 million new subscribers and 15% revenue growth. The market shared the results, sending the stock up more than 10% in after-hours trading. Netflix said its live streaming programming, such as Tyson-Paul boxing match and Christmas Day NFL games, helped boost its subscriber number. And the return of Squid Game also played as a key growth driver in the fourth quarter. So as it has proved that both live streaming and big franchise series can turbocharge its business growth, Netflix is going to raise subscription prices for premium and ad tier in North America and some other markets. With that, Netflix is confident that it would post better earnings in coming months. So its biggest titles, Squid Game, Wednesday, and Stranger Things, are all returning this year.
So this is the last time we're going to get subscriber numbers. How are we going to judge Netflix's performance going forward from here? Are there useful comparisons we can make? How useful are the other metrics in judging what this company is doing?
The paid subscriber number has been the key metrics to measure the growth of Netflix for sure. Since it now has more than 300 million subscribers, which is the largest among video streaming platforms, it's pretty uncertain how much headroom left for the overall subscriber growth. So Netflix is shifting its strategy as it's focusing more on ad tier and pricing policies that would expand its sales and improve profitability for coming years. And it's also diversifying revenue sources such as gaming that might help boost viewers' stickiness.
Walk us through this kind of aim, though, to broaden that kind of programming. You mentioned the live sports there. Walk us through how the economics of that work, because on the surface, it sounds pretty cost-intensive.
Right. So Netflix is like a global cable TV service. Now it has a scale and a wide audience pool from US and Europe to Asia and Latin America. And any big franchise series and live sports events, like the one with Beyonce halftime show, could instantly draw global viewerships and create social buzz around those moments. So that means Netflix now has negotiating power over increasing the ad sales for prime time, which might help recouping costs for the events and clinching more sports deals over the next few years. So regarding the programming, it has been cultivating production ecosystem in a couple of different markets like India, South Korea for sure, and Paris, Mexico, where they could attract more local subscribers and offer various programming to global viewers.
I think the big takeaway, live TV is good. Sohee Kim, thank you very much indeed. Let's talk about what is happening right here, right now. We're getting some headlines coming through. Christine Lagarde, president of the ECB, meeting coming up, of course. Direction for rates is clear. Pace depends on the data. The ECB is not behind the curve when it comes to rate cuts in Europe.
Also adding the gradual steps are reasonable at the moment, reiterating that the U.S. is not in the driver's seat. Coming up, we're going to talk about that impact on more of the banking sector. Francine's already had several. Now we've got Haslinda Amin joining us from the World Economic Forum in Davos for an exclusive conversation with the president and group CEO of Mizuho Financial. We were just talking about the Fed, the ECB. I'm sure he'll have plenty to say on the BOJ as well. Just a couple days away out from what's expected to be a very hawkish meeting. Stick with us. This is Bloomberg.
Welcome back to the opening trade. We are now 30 minutes into today's equity market session here in Europe. The Stock 600 has just surpassed its previous record closing high. Equities are bid. The DAX is outperforming.
In a very, very big way. We'll see if those gains hold throughout the rest of the session. In the meantime, we're also getting headlines coming out of Japan here. Kyoto reporting that the Japanese Prime Minister will be presenting an investment plan to Donald Trump at the summit. It looks like Prime Minister Ishiba is considering visiting the States as early as February. This, of course, follows conversation from the new Secretary of State, Marco Rubio, with the Japanese Foreign Minister to really get those investment proceedings moving forward. The context, of course, is the Nippon Steel deal being blocked in terms of the acquisition of U.S. Steel. We'll see how the Trump administration handles all of that. Let's continue the conversation about Japan and return to Davos, where Bloomberg's Haslinda Amin is joined by one of the biggest banks out of Japan. Haslinda.
Well, that's right. CEOs here in Davos assessing the Trump impact. Joining me now, Mizuho Financial Group CEO and President Masahiro Kihara. Masahiro-san, good to have you with us. It is, by the way, a very rare interview.
Yes.
You know, we talk about the impact of Trump. How do you think Trump would impact the banking industry in general?
Well, I think President Trump is very, very friendly to the business, and I think that will be generally that will be a plus to the banking industry. For us, we have a sizable operation in the U.S. We have been adding capabilities in the investment banking area, so this will be a good opportunity for us too. Yeah.
What opportunities do you see? We know that you'd like to expand your M&As, for instance.
Sure.
What are the plans?
So 2 years ago, we purchased a M&A boutique firm called Greenhill. And that has added a lot of transaction to our platform in the U.S., but also cross-border. So I think moving on, we should fully integrate this Greenhill platform into our Mizuho platform, and then we can collaborate. Those platforms can collaborate, and that will increase our transactions.
So that Greenhill acquisition is going smoothly.
Very well.
What can be expected in the next 12, 24 months?
Well, I would say that increased transactions, it means that the M&A transactions will increase. Also,
can you put a figure to it? Can you put a number?
Well, that's a little bit difficult for me at this moment. But but also, our revenue, let's say, 25% comes from the U.S. Actually, I guess we're probably aiming to sort of move that into 30% or so. That can be done, I think.
We know that Japanese companies are going overseas for acquisitions because of the shrinking population at home. But when it comes to the U.S., you got to wonder how Trump actually sees these acquisitions, how he feels about Japanese companies buying American companies. How are you assessing that?
Well, I guess it is important to understand the history of those industries that you have in U.S. Be sure that you make sure to the people that the Japanese industry will be able to help, and also if we do M&As, we will be U.S. companies in that sense when we do M&As in that area. So I think that's the most important part.
We know that you're projecting a record profit for the current fiscal year that ends in March.
Yes.
Can you build on that momentum? Can we see yet another record year in the coming fiscal year?
So I think there are 3 areas that is rewarding, actually. One is Japanese corporates. And we can talk about this more later, but the momentum in Japan is changing dramatically, I think. And the CEOs are willing to invest. And we see a lot of our corporate actions coming in, not only in the blue chip, but also in the mid-cap sectors. So that is a bright area. Another is asset management and wealth management. The attitude toward investment is changing dramatically in the individuals. So that is another bright spot. And the other one is our global corporate and investment banking platform that we have. And if the regions can collaborate, that will definitely expand our revenue.
So a lot of sources for revenue. Can you put a number to how much growth you might see in profit?
Yeah, so this year we will be aiming for after-tax profit 820 billion yen. I think in 3 or 4 years we should aim 1 trillion yen after-tax profit. Yeah.
Okay, we have to talk about the BOJ.
Sure.
Expectations are high that the BOJ will hike on Friday. Is that 100%?
Well, there's no 100% in this world, but
99%.
But I would say there is a high chance, 90% probably. BOJ was looking what this new President Trump's how it will come out. I think there was no, out of expectations. BOJ has confirmed that probably there will be 3 years of consecutive wage increase. So I think there is a circumstance environment set for them to raise rates. Yes.
Okay, so if it does raise rates on Friday, when could be the next move? It wouldn't be one and done.
Right. So July, making sure that the next wage increase will turn into increasing consumption in Japan. So July, and then maybe next January or February.
What might the movements be in the market? The last time the BOJ raised rates, we saw stocks slump 14%.
Right.
And we saw the unwinding of the yen carry trade.
Yes. Well, I guess it's the issue of conversation, dialogue with the market. And I think this time they are doing a good dialogue with the market, I think. So I don't think there will be a surprise in the market this time. Fundamentally, if you think why they are raising rates, it is because the fundamentals are good. There's wage increase, there's an increase in consumptions. So, there shouldn't be a surprise. That's what I think.
Do you think the BOJ might consider what the next move would be for the Fed and what the Fed might be doing in 2025?
Well, that would only be when BOJ will not, the Fed will not be able to, move down the interest rate because of the sticky, because inflation is sticky. Maybe that might be a concern for them because that means that the U.S. economy might go down. So, but as far as they don't see it, I don't think they will care about Fed's movement. Not that much.
The market seemed to prize perfection. What's the risk are you associating with that? Because we're seeing a herd mentality. People are so optimistic that the rally would continue, that the Fed's going to cut rates this year.
Right. Well, I guess currently the sentiment is very well. You always have to be careful about overreaction, overheating of the economy. And given the fact that we have operations all over the globe, we really have to be careful on that part.
And the biggest risk for you right now? Sticky inflation in the U.S., perhaps?
Yes, if that will be the case, I think rates higher for longer, that will definitely be one aspect that we really have to be careful. Yeah.
I'd like to ask you about the growth outlook for your business. Which are the biggest growth drivers you see?
So, number one is, it's a combination. We have, I think, just as I said, it's 3 areas. Japanese corporates, wholesale banking in Japan, asset management, wealth management in Japan, and the global CIB business that I just talked about. And I think those are the areas that we concentrate our business, and those are the areas that we get organic growth.
Just one final question before we let you go. The projection for the yen, some say 140, 145, and how would that impact your business?
Yeah, so I would say somewhere around 145 is the area that should go. As I said, 40% of our revenue comes from abroad, which means that when you calculate the profits into yen, it will decrease a little bit. But 10 yen, that's not big.
Okay, confidence there.
Yeah.
Masahiro-san, thank you so much for your time.
Thank you so much.
Mizuho Financial Group CEO and President Masahiro Kihara. Handing it back to you, Guy.
Yes, Linda, thank you very much indeed. Fascinating conversation. We're looking forward to hearing what the BOJ has to say in a few days' time. Coming up, we are going to be back in Davos. Francine will be joined by the Spanish Prime Minister, Pedro Sanchez. Stay with us for that conversation. It's coming up very shortly. This is Bloomberg.
all the data that I read over the last couple of weeks, I think were not a surprise to me. So it gave me the indication and also the certainty that we can achieve our target back to price stability. And we shouldn't forget where we came from. We came from more than 10% inflation rates for the Eurozone, and now we are close to our target.
Close to target, Bundesbank President and ECB Governing Council member Joachim Nagel speaking a little earlier at the World Economic Forum in Davos. Let's get back there now. Francine Lacroix is joined by the Spanish Prime Minister.
Yeah, thank you so much. I am indeed delighted to be joined by Head of State, Mr. Pedro Sanchez of Spain. Thank you, Prime Minister, for joining us. There's a lot of confusion on how Europe should and will handle Donald Trump. Do you feel that it's every man for himself?
Well, I think that we have to engage in a constructive approach in our relationship with the new administration. I do believe that Europe and the United States, we share a strong transatlantic bond rooted in common values, history, culture, and of course common interests. So, you know, at the end of the day, a trade war is not in the interest of the US and of course in the interest of the European Union. So let's focus on how do we strengthen this transatlantic relationship and avoid any kind of misunderstanding.
Is there a risk, Prime Minister, that actually European unity falls apart because he rattles the cage too much?
Well, I think that over the past 4 or 5 years, we have witnessed the strongest European Union, the strongest common response to common challenges, such as the COVID pandemic or the war in Ukraine. So, indeed, I do believe that one of the lessons that we take from the European Union is that we have to be stronger ownership in different sectors, such as digital technology or defense. And also we have to understand that Europe has its own way of responding to these challenges on climate, technology, how do we regulate AI, and so on and so forth. So, you know, I don't think it's a contradiction to have a constructive approach towards the U.S. administration, but of course, taking into account that we have our own way of responding to these common challenges.
Which ways, like retaliation?
No, I think that, for instance, we have witnessed over the past days that the European Union reached a very important trade agreement with Mexico, before with Mercosur, some years ago with Canada, also with Chile. So, you know, we do believe that we need more trade, not less. We want to open ourselves to and reach trade agreements and new relationships with different regional blocs and different countries. The world is very big, and I think that Europe has its own assets to be its strongest and of course to have more influence in the geopolitical debate.
Prime Minister, Spain has also welcomed a number of Chinese investments.
Yes.
Does that put you in the spearhead actually of Donald Trump? Does that worry you?
This is what I was trying to explain. We need to diversify our economic relationship. And we're looking forward to have this constructive approach with the U.S. administration. But of course, we need also to take into consideration the importance of China. In this regard, of course, you know, the surplus on trade that China has regarding the European Union is hard to maintain. Yeah. We defend a more balanced trade relationship between the European Union and China. And this is what we are, you know, focusing ourselves as a Spanish administration.
Prime Minister, so would you say you're the destination par excellence of Chinese investments in Europe? Is that how you would define yourself, that you're open for business for Chinese?
We're open for business for many countries. Yeah. Of course, China, because we want to have the best relationship with a very important country and a very important economy globally. But of course, we also understand that this imbalance is different. I mean, it's very hard to maintain, and this is something that we need to rebalance and to reconsider it, and this is what we are defending within the European Union, to have a common approach as Europe regarding China.
But Prime Minister, even if this angers Donald Trump, you will stay the course.
I mean, we see opportunities worldwide. We see opportunities also in China. We see opportunities in India. I was also traveling to India last year. We see opportunities in, as I said before, in Latin America, in Africa, in the US. We have strong investments in the US too, as you know, Spanish companies on renewables, infrastructures, and so on and so forth. So, you know, as I said before, we need more trade, not less trade. And that means that we need to strengthen our multilateral institutions, such as the World Trade Organization, or what the European Union is doing with Mercosur, with Chile, with Mexico, with Canada, and other countries.
Prime Minister, focusing on domestic issues, so can you clarify your position on housing tax for foreigners? You've said that you would tax 100%.
Yes.
And then there was, you know, some question marks on whether it would be an outright ban.
No, it's taxing, and this is because you know, Spain is facing a critical housing situation. Yeah. A very critical housing situation. To give you some figures, you know, prices have gotten up 48%, 48% in the last decade. So what we need to do is to preserve and to consolidate the residential use of housing, and that is why we took some measures, some decisions, and one of it is the one that you mentioned. Because at the end of the day, what we need is more affordable housing and fewer Airbnbs.
But, Prime Minister, is there a danger that actually this is seen as anti-investment? So I think we understand there's about like 20,000 houses that are mainly on beachfront.
2023, we had 27,000 houses of people, European non-resident in Spain, non-European resident in Spain that were investing in these real estate properties, but without living in Spain. And as I said before, what is important is to keep in mind that we are facing a very critical housing situation in Spain, and for that we need to, you know, to use all the means, all the tools that at the end of the day the state has in order to reduce and to preserve the residential use of housing.
But so this won't scare away investors?
I won't say that, because at the end of the day, what you see the figures is that foreign investments are coming to Spain. They're confident with the economic growth of Spain in the past years, but also in the coming years. So I think that there's a combination of different aspects. First, strong economic growth. With CO2 reduction emissions. Second, strong employment generations with salary increases. And of course, a strong investment in public services with sound fiscal policy. So I do believe that Spain, you know, we're very confident with the incoming years in terms of economic growth and employment generation.
Prime Minister, can you give some kind of confidence to the markets or investors that this is the only measure you'll take that could be seen as anti-foreign investment?
Well, at the end of the day, what we are seeing in Spain is, you know, to give you an example, in the last 5 years, between 2018 and 2024, Spain was the 5th largest recipient of greenfield projects. And this is because we have a consistent energy policy as well as others policies. Because what we have witnessed over the past 6 years in Spain is a strong structural reforms in labor market, in pension system, in our educational system, and of course with sound fiscal policies that allow us to end 2024 with a public deficit of 3% of our GDP and with a reduction of 20 points of our public debt.
Envy that. Prime Minister, let me ask you about banks. Are you still against the BBVA Sabadell deal?
Well, this is not a question to be asked to Prime Minister of the government, because it's under review of our competition authorities.
But is it something that you would welcome in terms of domestic, or would you rather a foreign bank coming in? We're trying to understand the
no, what we want is, you know, is we have to take into consideration different aspects. Of course, as you know, quite well in Spain. We have, a large number of SMEs,
Yes.
90%. And in this regard, social cohesion, territorial cohesion, SMEs. So we have a strong financial system in Spain, and let's wait until our competition authorities state in this operation.
Prime Minister, what does your gut feeling say? What would you rather for your citizens? Like a domestic consolidation, or even a European bank coming in and saying, actually, this looks like a good bank, let me buy it?
Well, what I want is a strong financial system in Spain, and let's wait and see what our competition authorities state in this regard.
Prime Minister, what's the latest with Telefonica? The chairman left, what's next?
What is next is that we have a new shareholder base. This was a corporate, let's say, a decision taken by these new shareholders in Telefonica, and we're very confident. Telefonica, as you know quite well, is very important for us in terms of telecom industry, digital economy, and of course security and defense. So we're very excited and confident with the new team, and of course we're also very grateful with the former CEO of Telefonica, José María Payete.
Would you like it to be part of your semiconductor strategy? I know this is something that's extremely important to the government and strategically probably makes sense. Will Telefonica be part of that?
Well, Telefonica has a major role to play in different aspects of our economy. So let's wait and see, the new team. But we're really confident, and of course, regarding semiconductor industry and digital economy, of course, I think that Telefonica can play a very important role.
So you would encourage them?
Well, I won't say that because I'm the Prime Minister. This is a corporation decision, but I think that we have a lot of assets, and we are living a great momentum, economic momentum in Spain, with good expectations in the coming years. So we are here to take advantage of these good expectations.
Prime Minister, as always, wonderful to interview. Thank you so much for making time in Davos. I know you have a very busy schedule here. That was the Spanish Prime Minister, Pedro Sanchez. We'll have plenty more throughout the day here from Davos.
Bloomberg's Francine Lacqua, of course, there with the Spanish Prime Minister. We thank you so much for bringing that to us. Several great interviews coming up out of Switzerland. The governor of the Bank of Spain, Jose Luis Escriva, will be joining the program as well. Vladimir Zelensky, the president of Ukraine. We've got the president of Argentina as well, with Javier Milei. And, of course, the president of Finland, Alexander Stubb, as well. An all-star lineup covering geopolitics, interest rates. I'm sure defense will be on the agenda as well.
Absolutely. So what did we learn this morning? The UK budget deficit, much bigger than we anticipated. Not much reaction in gilts. European equities broadly on the front foot.
Yeah.
It seems as if the tariff risk appears to be at least fading for now. The AI story, though, very much on the front foot as well this morning. And we've had a series of European stocks doing relatively well this morning. Adidas is the one that really stands out to me. Strong sales. Is that a consumer that is still on the front foot? And
the conversation still being that even with the chaos emanating out of Washington, D.C. in terms of the impact on the rest of the world, the executives you're hearing out of Switzerland still very positive on the United States.
More positive. They love the growth agenda. They love this idea that growth is being pushed in the United States aggressively. Is that something that Europe can now replicate? I guess one of the key conversations that will be taking place in Davos. We will continue the conversation. Much more coming up out of the World Economic Forum. That wraps up the opening trade. Of course, the Pulse is next from Davos. This is Bloomberg.